Good, good, good. Well, let's take a look. Let's do the market recap today because it's Monday. So we do have still a very, very bullish, thrust in the markets here. Like you can see here, right? We're on day 4. But I think that really like the hallmark of like knowing that we're actually in a really strong market is when you have like these gap downs and they actually get bought up. Like see, like this was like a 0.6% gap down and you get bought up. And so what we're seeing is here, see on the 28th, like how you kind of ripped lower and then, right, it gets bought up here. And I apologize if the net is slow and stuff. The Italian internet is slower than even Costa Rican internet. Like it's, I don't know what's going on. I don't know what's going on. And these Nescafe cafes, this is not real coffee. I don't care what anybody says. I thought people are supposed to be known for the coffee around here. So we got the slow net. This Nescafe coffee is giving me a little bit of turbulence in my stomach, but I always trade good on the road. So just a word to the wise for you guys. We'll be very aggressive for the next probably month or so. I've always traded very good on the road, always much better than at home. I don't know what it is. Probably just laptop lifestyle is like less busy than, right, giant $10,000 monitor lifestyle, I guess. Who knows? But that's just the way it goes. But back into this market. So this is the hallmark of, right, a bullish thing. When we were like, say, a month ago or 2 months ago, right, these kind of gap downs, you would be looking down here, right, and trying to short them on the break of lows because, right, that's like your quintessential bear flag. And so that ends up being, right, like the go-to setup, like when the market is rolling over, because that's a momentum setup to the downside. But now that like the downside has been really like we've been in kind of a range for the last, right, like since the middle of May, what's happening now is there's been a subtle shift in market structure. And now you're starting to get, even though you're in range, you're getting much, much more bullish action to the upside, where now when you see these gap downs, you see them bought up, where before, right, you'd be shorting them. And so that's the hallmark of, right, a tried and true, right, the bullish thrust in the overall market. And you can see here, right, like we've got kind of taken out this range. And I think as long as we hang out over the 50-day moving average, we're in a bullish thrust. I do think because now we're on day 4 of the move, and you can see here we're at 95 stochastics, we'll probably have some kind of shakeout in the next, at some point this week that will bring back the shorts and, right, with some negativity. And if that gets bought up, then that's going to be really bullish for the market too. And we're starting to see that. See, the market is shaking off bad news, right? That CPI number came out and the market gapped down 2% in it, right? It filled that gap that day, right? We rose interest rates again, and the market's like shaking all this stuff off because this is all known now. And frankly, even though it doesn't look like much from here to here, the individual stocks are down so much, right? Like, so if you're talking about your tech stocks in specific, like your Affirms and Robloxes, right? They're all down 80%, 75, 80, 90%. And so, you have also just not that much room to, kind of come into these things. So just something to just kind of keep mind of as you're doing this, is we've got all sorts of, right, we've got all sorts of things going on here. And like, if we're looking like, let's say at the T21087 indicator, or, even the 9. So these are like a measure, right, of market breadth. So the T2108 is at a 686. So like, if we think about that, that's a measure of market breadth. So usually around 10, right, that's when the market starts to rebound, because it's saying that the market is so oversold that, right, there's just not that, there's nowhere left to go. So it's like a mean reversion tactic. And anything over 80 is considered overbought. So you can see like throughout, like since I've been trading this, if you look at like a weekly on this, anytime you've broken under 10, it has started very, very big runs in the market. Like it's been, since I can remember, it's been like that. And I think that's going to be just a really important thing to kind of keep an eye on. So even though the indexes are slowly going up, the actual market breadth, the percentage stocks above its 40-day PMA has gone up considerably, right? And so when you have that, that's going to tell you, right, that there's a large breadth of stocks. There's broad participation in the markets, and that's what you want to see in the markets. And so I think that's going to be a pretty good. So let's talk about, today's trades while we're here, right? So what we want to really be doing is, we want to be aggressive, right? We want to be aggressive, and I was thinking probably we were going to pull back today. So, our first trade of the day, we shorted the gap up on AMD. And, this ended up just being kind of a one candle play. So AMD's up right into the Bollinger Band, right here at 93 stochastics, give or take. And so we have like this kind of extension. And I was thinking probably we're going to pull back a little bit in the market, especially because the market gapped down. And then this was like kind of spiking up some of these semiconductors. And then like Taiwan Semiconductor had its earnings out and it had a big gap down on it. And so I was thinking, a couple of these, right? Like on semiconductor, both of these were gapping down. So I was thinking there might be a pullback in the semiconductor market. So I shorted into this gap up, right? And, I got a 0.7s entry. And my thinking was, if we break under this 94, we were really going to, really get shemangled here. And I ended up covering half the position near the 94 at 94.17 for the simple reason that, especially on Monday, like I always like to get on the board, right? If you're up $500, $1,000, like take some of it off. And then I always put, a flat stop on the rest of my shares, and so I ended up covering the rest flat. Once AMD reversed, okay, that gave me a sign. Then I was looking at Taiwan Semiconductor and ON, and you can see like ON was immediately reversing off the gap down. So I thought like, oh shit, like there's probably going to be a run in semis, like these things may come and fill the gap. So we ended up, longing NVIDIA right out of the gate. So NVIDIA has like a level here on the daily chart around this kind of 181 to 182. And so I've been staring at this for a while anyways. And, with AMD and all these other ones reversing, we want to get some exposure to this. So you can see the gap down on this. And then, right, it goes red to green here. And then you have this level, right, from like the previous day. And so that's what I was looking at. I consider this almost like a makeshift ORB, but like this is a tried and true setup. Like when you have something with a lot of momentum and you break the previous day's range, that ends up being like a really nice, entry. So, we flipped this flipped this long. So I ended up with 182.42, right as it's starting to break. And as always, like I always sell some into the first spikes. And then you can see like you ended up kind of consolidating here. And frankly, this could have been a secondary entry. I did not add to it as we were kind of knee deep in some other things. But in hindsight, I really should have. We are in the business of taking on risk. And when you have something with momentum and you get secondary setups in it, you do want to like push it and get as much extra as you can. So I do think I should have taken on some more risks. And so, I ended up scaling out a little bit early. You see like 184.10, nice sold some 186.70s, and then 187.26. And so I'm essentially just piecing out of this into this spike over here. And I could have probably reloaded some here, at 10:30. It's still considered morning. You can do bounces off the 9 EMA like 10:30 and before, or even a little bit after 10:30, but you don't want to do them like at noon or 1 p.m. because they won't work as well, because the MA's flatten out and then you just don't have that kind of heat. So I scaled out into this 187, my last shares. So it ends up being a decent rip. But once again, we're in the business of taking on risk. I should have been more aggressive, reloaded. I wouldn't say I would reload like a full size here because it's a secondary setup with the RR's not going to be as good as the first dairy setup. But, right, like the big hairy butt is, you can still get a scalpy McGee out of it. Even though the daily break is here at 182, you can keep day trading it. But the farther it gets above there, right, the more scalp oriented you have to be. So I think that's something, that I could have been a little bit better on. But that's just the nature of the game. Then, we ended up longing PGY at 23. And, I scaled out of this pretty good back and forth here. But you can see, like, the entry was fairly good. I could have actually taken a little bit of a starter before that. But, I was a little bit preoccupied with the NVIDIA. So this is just what we call a pure trend setup. right? You've got a lot of momentum in this and a lot of volume. There's not necessarily a daily chart set up on this. What this is just a trend trade. So you have different buckets of trading. You know, you have stocks with fresh news out. Then you have stocks with really good daily charts that are like coming out of some swing trade pattern. And then you have just your trend trades, which are like your daily traders of something that's just hot, that's got a lot of momentum that you can kind of scalp back and forth. We call those scalpy McGee's. So after the big run in this year from 17 to 26, it gapped down today. And in a market that's hot, those gap downs, especially if it can trigger an SSR, they really get bought up fast because, they gap down. And so people forget about them. It sucks in the shorts and you get just this slight rounding and then it can be a go. So I was using a 2-minute chart on this. So you can see here, after the gap down, what I was doing is I'm just looking and I'm watching and, a lot of people like to scale in and out of their trades. I like to be a one shot, one kill because it's just too much work to scale into them because then you get bad entry and then, you're just adding at the wrong spot. So I like to be, at least on the entries, one shot, one kill. So as this is starting to kind of round here, I've just put this level right here at 23.20 to fill the gap. And I ended up getting filled a little bit higher because I market ordered it. The reason I just market order because I'm in Italy, the net's been coming and going and, you're not getting necessarily all the data show up. So you kind of close your eyes and do it versus sitting around messing with 6 different limit orders and canceling them and, so on and so forth. So as soon as this thing breaks here, I'm putting a stop right under it. So I'm risking 70 cents. And my hope is to get this thing into the red to green and fill the gap and kind of come back into this range. And that's what we did. I ended up selling off half into at 25.30s, which is just a good, even though you're selling early, because you don't know it's going to go to 31.32, but that first half, that's your income trades. You want to be taking money fast as soon as you see them, even if you leave a lot on the table, because that's why you have your lotto shares and you can start adding to it as it starts to go, right? So I ended up selling off half, and I pieced off pretty much every dollar along the way because this thing is probably a huge gelatinous turd anyways. And, my thinking is this 27 is going to be some resistance. And so essentially I want to sell off most of my shares into that in case it ends up being kind of more of a double top thing. And then as it starts to flag, I'm holding on to this and I reload back in, so you can come back in and, I relong some at 28.30s. And as where flag is starting to build here, you can see here, if you see, it'll look a little bit better on a 2-minute chart, right? So as this is starting to build here, I reload right back into this for a scalpy McGee, right? And I want to kind of piece out of this also every dollar or so, and so I was up 29.26, 30.30, 31.79. So, these are just boom, 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 boom. I'm taking it and I'm just ripping and roaring in this thing. And that's why I'll always sell a little bit early and take profits because we will have secondary opportunities to get into these names. So you can piece out and then as you flag, you do it again and you just kind of keep selling out of this thing. And at some point, what happens is the last shares I got at 30.50. Once it starts, the 9 EMA starts to round and turn down, that's telling you, especially during lunch, it's probably going to roll over, and you want to sell out. So I just put a stop on the rest of it at my 9 EMA and I ended up getting stopped out at 30.50s for the rest. Now we did take a couple other trades on this. I was messing around with this TVLT2. Guys, I hate trading fucking small caps, but every blue moon, you just have enough heat in the market where a lot of the large cap stocks I'm watching are super extended, right? So they may take breathers this, Tesla and stuff. They're at resistance. They may take breathers and then you get a shift into some of these other names. I did take a trade in this TBLT today, and this was pretty much a nothing burger. You could see we ended up taking the flag break, over on the 2-minute chart. It popped up for a hot second. I ended up getting up just a small piece of it. I ended up long in 932, sold half 953, and I put a stop in my buy price, make it a free trade, and I ended up getting a little bit of a bad feeling. I feel it 925, and this thing's been a turd today, but I did like the daily chart. I thought, maybe it's got a little bit of a chance to go, but frankly, it also could just be a double top, right? So you just don't know on that. But overall, we'll see like what's going on the rest of the day. I plan on taking off in the next few minutes, and then I'll probably come back for the close and see what's going on. But it's a nice day, man. It's so hot everywhere. Good Lord, it's like 95 degrees out there. It is hot, hot, hot. But otherwise, hey, what can you do? It's a good market. I do want to be us to stay aggressive, for the next, period of a couple weeks. It does not mean that the market has bottomed or anything like that. But in bear markets and longer term, we're still in a bear market, and then right into this midterms, we're more in a range, and short term we're trending, right? So short term we're trending, kind of your midterm intermediate, you're inside range, and then long term, right, and you're in the bear. So we have kind of a little bit of a cross current, but some of the hottest trading can be done to the upside in bear markets when the market is bouncing. So I do want to, be aggressive and stack cash for the next week or two in case we get stuck back in this range here, because a lot of the stocks, like, if we get stuck back in the range or even get back towards lows, a lot of the stocks are down so low, like you won't get the same kind of heat to the downside as you did in the beginning of the bear market when PayPal, Square, Affirm, UPSC, these are all $200, $300, $400, right? So like when the bear market started, the ramps down were so big, but like now with everything sitting at $20, $30, $40, $50, right? Like the downside is still there because they can get really lower, but the range and velocity to the downside will be considerably slower, and so that's something we always have to keep in your mind. But if any of you guys had a tough year trading, whether swing trading or day trading, the market is starting to heal, and this is a good time to start slowly picking up your risk profile, either through sizing or right the amount of trades you do. I'm not doing it through sizing. I prefer to increase my frequency of trading versus increasing my size, because right, you can increase profits in either way, right? You can up your risk profile or up your frequency. And I think upping your frequency is a better way, because when the market starts to heat up, you find a lot more opportunities. You can run your scans every day and keep them going. You'll start to see all sorts of stuff, right? Like you'll start to see all sorts of stuff firing off every day. And so this is still a good way to go. Like you've seen all these kind of names, like, right, Boeing and stuff like that. Like these are 7% move for Boeing is really big. 7% move for Shop is really big. These are big trenders. So it's telling us a story in the market of what's happening. I think that's going to be pretty important. But we definitely want to up our risk profile and our frequency a little bit and see what's going on. All right, everybody have a good day. Does anybody got, and then we'll see what's going on. Samurai, you're in charge. All right. Peace.